Hi, this is Toni Turner, and welcome to the market now as of about noon Eastern on Friday, September 15th. Before we start, please join me at the Money Show Dallas, October 4th through 6th. I'll speak on Friday, October 6th on Active Investing, 3 Steps to Consistent Profits. Just go to moneyshow.com and click on the Money Show Dallas banner. You'll see it right in the middle of that home page. And now let's go on to the market. U.S. stocks were a little changed today, but the Dow eked out another record high as traders shrugged off North Korea's latest missile test and the terrorist attack in London. The major indexes are hovering at record high levels, with investors now waiting the Federal Reserve's meeting on September 19th and 20th to gauge the future path of monetary policy. No monetary policy change is expected at the meeting. We don't really expect them to raise interest rates, but the odds of a December rate hike jumped on Thursday after a strong report on consumer prices provided a closer read on inflation, which the central bank is closely monitoring. And now let's go on to 3 charts that could give us some insight into the week to come. First of all, as we normally do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our S&P 500 index. Now on September 13th, just actually this past Wednesday, the S&P SPDR made an all-time closing high at $250.17. If you look down here, we see that today when I captured this chart, the SPY was trading at $248.97. It gapped down just a little bit this morning, as you see, but is now basically hanging tough but going nowhere, all up above its major moving averages. The red line is the 20-day moving average, the green line is the 50-day moving average, and the black line is the 200-day moving average. Now we see that a source of potential strong support here would be the 50-day moving average, the green line. It's coming in right now at $246.15. So we can say that there's pretty decent potential support right around $246. We also have a long-term trend line that I've drawn here that you can see, this black line on the chart. It's coming in here at a little over 244, so we have more potential support there. Of course, we're looking for the SPY here to break out over 250 and move on, keep this uptrend going and go on to higher highs and higher lows. But of course, that's a tough act to do in September, which is usually a volatile month, although this month the market's been reasonably happy. Of course, if the SPY does move down, break the 50-day and the trend line, and then head down a little lower, we do have support coming in at 242. We also have more coming in just all the way down to 240, which would be 2,400 on the S&P 500 itself. As you can see here, it makes perfect sense. The RSI is almost in overbought zone. It's bumping its head on the 70 line, which indicates the overbought zone on the 14-day RSI. It's not over it, it's near it. The slow stochastics, however, which is more of a drama queen, this indicator says that the SPY is overbought, and I should say it is, as it's trading up near its highs. So next week is going to be the week where the rubber meets the road, where we see if the SPY can continue, the S&P 500 can continue in this beautiful uptrend that it's in, or if something knocks it off its perch for a little while. I myself would prefer a rest stop here. I'd like the market to move down and rest a little bit. I typically raise cash, and I'm doing so right now when the market reaches all-time highs like it is right now. I typically raise cash because I do at some point here expect a mild drawdown, and I want to have the cash, take some profits and have the cash for the opportunities that are bound to show up later on in October and into November. Okay, our next chart here is a chart of the iShares Russell 2000 ETF, symbol IWM. In Tony's Market Club, held every Monday, we do watch the IWM as one of our indicators. The Russell 2000 is the small cap index, and the small cap index can act as more of a leading indicator to this market, more than most people know about. Now, if you back up and look at this chart, sit back in your seat and look at the longer term view as it's stretched from the left side of this chart all the way over to the hard right edge, we can see that if this was a person that you were looking at, you would say, well, this person is kind of not sure of what they want to do next. Some days they're down, some days they're up, some weeks they're back down again, then rise to the top, woohoo, and then fall back down to the lows, and then scamper right back up resilient like, hey, nothing bad happened here. So the longer term view, if you back up and look at it, you say, the IWM doesn't quite know what to do. It's really happy some weeks and really depressed on others. And what does that mean? Well, it means we have to wait until it once again at some point establishes a trend, hopefully up, because again we can use small caps as kind of a leading indicator to future broad market direction. Now, the IWM did make an all-time closing high on July 25th, up here near 144. Then it fell down, got exhausted, and it had a reversal day right here on July 26th. Then it fell down really hard below its 200-day moving average, down into this August low of 134, and our line in the sand here is 132 for the IWM to fall and still be reasonably positive here. Then it shot up to a recent Wednesday closing high at $141.96. Now today it's trading at $141.85. It's positive on the day. It did make this nice resilient rally here. Now we have to see, it's overbought almost in the short term, like the RSI says, overbought on slow stochastics. We have to see, can the IWM continue to rally up to prior highs and then rally up and start a new uptrend, or is it going to go back to the things the moves it's been making for most of the year? Is it going to pull back here below the 50 and even the 200-day moving average? One just doesn't know right now. It's hard to kind of figure where the IWM will go next, but if it rallies higher, that will be a positive for the market. If it falls and can't maintain these highs and falls back below the 200-day moving average, then I'll consider it to be a slight negative for the market. Now let's go on to our final chart here. This is one we haven't looked at, indeed, for a long, long time. It's the iShares Global Infrastructure ETF, symbol IGF. Of course, this is the daily chart. Top components in the IGF, and remember this is a global ETF, are Transurban Group, Atlantia, Enbridge, NextEra Energy, of course that's a US company, TransCanada Pipeline. We look at the IGF here, we see that it's been really strong from the first of the year, moving up above its 50 and 20-day moving averages. Then it took it fell down, it dipped here, we can call this a rest stop, dipped in July down to $143.28, then rallied strongly back up again, back above the 20 and 50-day moving averages. And as we look at it today, it's trading at about $46. Now it made a recent high up here at about 49, but its all-time high is up at $53.86 from back in March of 2008. So it still has some room to run here before it reaches that. Today, as you can see, or in the last few days, it got ahead of itself this past week and pulled back down here to the 20-day moving average, again trading at 46.03 at this moment. I would like to see it, of course, if I had my druthers, I'd like to see the IGF pull back closer to the 50-day moving average and then bounce. That would be the perfect scenario. Many times when you see a stock or ETF pull back to the 50-day and then bounce, it means that that buyers, sometimes institutional buyers, the big guys, are coming in and purchasing the asset, and it means it's favorably looked upon and could easily stay above its 50-day for time to come. The important thing is here that the 50-day moving average is rising. That's what I like. So I'm going to watch this into next week. I'm going to see what it does. If it bounces here off the 20 and starts back up, I may add a small portion of it to my portfolio. With the market at all-time highs, I don't like to add big positions. I like to hold back. Again, I want to keep some powder dry for future plays, but this looks like something that could be interesting and maybe go on for a while. Certainly Europe's done well recently, and this infrastructure play looks interesting to me. So keep an eye on it into the next week. Of course, if you get into the IGF and it rolls over and closes below the 50-day moving average, which is coming in at 45.32 right now, if it does that, then I am out of the trade. That is my protective stop. No questions asked. I'm out. Okay, and now on to next week's economic reports. But first, please join us this coming Monday, September 18th, for our next session of Tony's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may be ripe for high potential trades. And our trades have done so well lately. We're very fortunate. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording is available to all of our members just a few minutes after the session ends. For more information and to join, just go to tonysmarketclub.com. For economic reports coming up this next week, Monday, not much going on. Tuesday, we have building permits and housing starts. Wednesday, we have existing home sales, crude inventories, and the all-important announcement from the Federal Open Market Committee, the FOMC. So we'll want to stay tuned for that at about 2 p.m. on 2:15 to 2:15 on Wednesday, and that would be Eastern Time. Thursday, we have jobless claims, the Philly Fed, and natural gas inventories as usual. On Friday, not much going on. Please, again, join us for Tony's Market Club this coming Monday. This may get a little hairy in September. You'll want to know what to do. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.